Hey, everybody, welcome to another episode of the Daily Read with Jeff Kickle here on Exit Rich, Retire Free. Today is Wednesday, August 12th, and it is a big day because this is the day we've been waiting for almost a week now to get a read on the CPI data. So let's get started and take a look at what's going on. So, same beats, different mood. 2 weeks ago on the show, I told you that a company could beat with earnings on every single line and still watch its stock fall. Beats aren't enough, I said. Today, the exact same kind of blowout earnings sent stocks up 15 and 20%. Same news, opposite reaction. So, what changed? Let's get on to it. Here's what happened. This morning's inflation report, a big one for everyone, that what they were watching, and it came in as exactly as hoped. Cooling, in line, no surprises, and just like that, the fear of another Fed rate hike came off the table. The market celebrated the only way it knows how lately. It poured back into the AI trade. Supermicro computer jumped 15% on earnings. Nebius, an NVIDIA partner, soared 19. CoreWeave, another AI cloud name, 18%. Now compare that to 2 weeks ago when Western Digital beat by a mile and dropped. Same kind of news, opposite outcome because the backdrop has changed. So let's look what's under the hood. Why does the identical news flip from bad to good? Because a stock's reaction was never about the news alone. It's about the news versus what's already priced in and the mood it lands in. 2 weeks ago, the market was crowded, nervous, holding its breath for data. In that mood, every or even spectacular earnings became a reason to sell. Take the money and run, basically. So today, with the inflation fear lifted and Fed rate cut hopes alive, that same spectacular earnings report lands in a relieved market that's ready to buy. The earnings didn't just get better between then and now, the soil that they landed in did. Mood is the multiplier here. So, what does it mean for you? The lesson is not AI is back, go chase it. It's something subtler and more useful. Pay attention to the backdrop, not just the headline. The very same news gets pushed or gets punished in a nervous market and rewarded in a relieved one. So when you see a stock react in a way that seems disconnected from its own news, up on bad, down on good, don't assume the company changed. Look at the mood of the whole market. Read the room, not just the report. So, two things I'm watching from here. First, does this enthusiasm hold or fade like it did a couple weeks ago? One good inflation number lifted the mood, but the data isn't finished. There's another inflation reading tomorrow and retail sales on Friday. So tomorrow will be PPI, Producer Price Index, and retail sales on Friday. And second, watch whether this rally broadens out or narrows right back into the same handful of AI names again. A rally carried by five stocks is a fragile rally. A rally that spreads is a durable one. And today it leaned AI, tomorrow tells us a lot more. So, quick summary of what we talked about. Same beats, different mood. Confidence is now medium to high. We've moved into that. We've been in this kind of neutral medium mode for about a week and a half. We're medium to high, meaning we've moved bullish. The market is really starting to move in the bullish direction and it's not responding to things, especially the individual stocks are not responding to things bad. Risk level is moderate, so it's not high like it's been as well. It's starting to moderate a little bit, and hopefully that will continue to go down from a risk perspective. What we need to watch, does the AI trade hold? We need to watch PPI Thursday, retail sales on Friday. Bottom line is read the room, not just the report. The backdrop flipped the same news from sell to buy. So that's your daily read. I'm Jeff Kickle with Exit Rich, Retire Free. As always, this is for education and not investment advice. But if you want to talk about your own plan, you know where to find me. So we'll see you guys back here the very next time.